Testing, 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 testing. 1, 2, 3. All right. I wanted to look at the complex, gold, silver, where we're at. Take a step back. Are the micro drivers still in place? Is the trend still in our favor? And are we getting close to some type of resolution? It's been a while. It's been a little emotionally draining, waiting for that next move to happen after that March explosion. So let's take a look at the state of affairs, guys. Here's a volume profiling that I just started getting a hang out of this. You have volume per candle, but here this is the volume per price range. So there's price action here, the volume that moves that candle up or down. You see it here. The yellow's for down movement. The blue or light green is for up movement. When you have a lot of action for a long period of time, you see a pyramid here, peak, a valley, and this is an important decision zone or fair value zone. The market's okay. That's about how much we think you're worth right now. Everything's starting to get priced in. Sellers that want to sell are out. Buyers, they start positioning themselves for the next move, until eventually that price topples over a peak and doesn't get back on top and keeps toppling, and then slides down until you hit volume nodes. This is a high volume node. Here's a low volume node and right here, see where you consolidated for 5-6 months. Then market says you're going to stall a little bit here. Volume accumulating. It's like a magnet, and after that, releases the energy, goes down until you start building up another congestion area, another volume node. And right now, since we're approaching all-time highs, there's barely any volume that was created here. So it's actually going to create its own eventually. But we know it could create its own, slowing it down, price action. But we know there isn't any pre-created resistance right there, right? There's no, we might start lacking buyers, but there's no sellers that bought high and they just want to sell to break even. We're running out of that. The longer we're staying here close to these top, and since we didn't have a lot of volume there, it's pretty thin right there to be able to go through. Gold, 1 year moving average, always standing strong above it, just like it did from 2001. I have the 3 year moving average, so for those exceptional corrections, high volatility moments, the 3 year moving average, you should still stay above it. Look at that 2008 GFC crisis. Gold still stayed about its 3 year moving average. You should always be able to survive a pullback to the 1 year moving average or whatever instrument you have. Look at how it behaves. Its long-term average, how many times it previously touched it, and make sure you're able to survive that. Because if you put your sell stop so close because your position size is too high and you're not able, I'm talking for position, if you're day trading or small, maybe swing trading, you might be able to have a closer sell stop. But if you're doing position trading, it's going to touch the 1 year moving average. It will. So if your sell stop right away, it's above the 1 year moving average, you're just begging the volatility is going to trigger sell stop, and then the price probably going to continue upwards. Look at that. Here never touched that 1 year moving average. So right here, even we had the March madness right here. We just barely went below that 12 month moving average, and the price action kept going up. Same type of setup that we had here. Nice base, broke out above. Starting to create Ichimoku Cloud defined support, and here we're creating another volume node, and this is probably what we're creating right here. We're going to start create one, and once we're through, we're going to slide probably the distance of this measured move. I think 2250, 2300, about that. So it's looking very bullish. This would have been probably the best area ever to enter right here, close that 1 year moving average. The second best entry we've had recently is that pullback to that 1 year moving average, or probably a lot of fear. It's over. We're never going to bust through that 1550. Right here, probably one of the best entries we could have gotten. It's looking very, very good. You're in an uptrend. No reason to look for a downtrend right now. Everything's angling upwards, guys. All right, silver. Same type of thing. the volume profiling. Look, somebody who's good at just classical charting, with a lot of experience, the formations that you have here, let's say you have a rounding base or a triangle or a channel, someone who's really, really good, you won't even need volume profiling because he'll know by the bigger the base, he probably intuitively, you know that there's a lot of volume that was created there. And when the price action breaks upwards, most of the time that means there won't be a high volume defined resistance above it. But for visually, even for a newbie or even for me, I find it helps very much seeing the actual volume. So sometimes the formation, you think you're looking at a formation, but the volume really helps to confirm that yes, you did have a big base. Yes, the resistance is above on the slide going down. You know that the support's there. So it really, really helps see the amplitude, the importance of the base. Just like we had, and then you could see here, oh, look at this base, it was important. Oh, look at this breakout area here. That's where it was. And sometimes when you draw your lines, you're not too sure at the beginning. So this really helps you look and see exactly where the important levels are. And it doesn't always resemble the trend lines based on closes, but it gives you another area of support where a lot of people transacted. So you see right here, we had a breakout a little lower than the monthly defined breakout. Strong price action. Now, since we broke out above, it's become support. It's right below where we are here. Broke out, creates another volume node. And as soon as we keep sliding down and down, and we're not sliding the other way back below, because if you slide below, all this price action right here, this volume defined price action now becomes resistance, and then you have to overcome that on the way back up. So now look at that. We're on the good slide of all this base, of all this now becomes support. We're on the great side. And here, this is like the 20 area right here. If we could bust through that volume defined resistance, the next time we have a node, we should have a vacuum up all the way to this predefined volume node, $27. Also coincides with a wall, this previous breakdown of this pattern. Support, now turn resistance. Everything matches up pretty cool. Same type of thing we had here back in the 2003 breakout, and the ratio is the same. I've seen it looks pretty much the same. I think $5 to $7, like 75% or 50%, and 18 to 27, I think it's 66%. So same type of move, just on a bigger, grandiose scale. Volume defined on monthly chart. Powerful combination, guys. All right. So now let's look big. Even monthly chart for some, it's pretty big time frame. But you gotta, even if you're a day trader, daily chart, 4-hour chart, always make sure the monthly chart is behind you. It could save you anytime you make a mistake. You didn't get in the good timing. That pressure, that upward multi-year pressure could help you bring it upwards. I was having fun with the yearly chart. And I was wondering, signals are different on yearly charts because a lot of price action becomes wicks. So these even monthly candles, lots of months end up being a wick. And the year close, super important. When you take a step back, you see that gold's yearly defined high and resistance is 1675. We're already above that. And then we look at it and say, okay, well, that's the breakout we're looking for. And the breakout from that base, was it actually in June of 2019 or before? Usually I define with the breakout lines on closes, the higher, like I would have needed like a white candle here or a green candle. I didn't have that candle to start defining that resistance, that breakout level. So I kind of cheated. I put it here at 1200. Gold probably could have broken out. You could make a case that gold on the yearly chart broke out from this descending pattern, a couple of year base right here, actually broke out in 2017 with that close above. Then you see a sideways move, a lot of price action going down. That's probably the 2018 lows, goes down here, then goes back up, then continues. And when I took a step back and I looked at silver chart, I said, look, silver, it has this like a dragonfly doji, I believe, with the long leg, kind of looked like that one. What if silver on the yearly chart had already broken out? Price action goes down. In 2017, closed here. So that's yearly defined resistance. There's a wick above. You can't go above. Price action goes back down. The next year stays within the pattern. 2019 actually closed above the 2017 yearly defined highs. And that's a 1, 2, 3, 4, 5. It closed here. 6. That's like a 6-year yearly defined high that was actually broken out in 2019. And I think that went pretty much under the radar, guys. And right there, if I made an analog comparison, this Dragonfly Doji, I could make a case that it's the second year after that breakout off that base that gold had. And then gold in 18 months, 1, 2, above its yearly defined breakout level, 1675. So for silver, 31, guys, 31 for me. If I get a yearly close above 31, forget 65, 55. For me, that's the breakout level that I'm looking for. And right now, I think I wrote 18 months, but I think it's more like maybe 24 months, maybe before. I think that if it repeats what gold did, it's really possible that that angle of entry is going to be the same angle of exit, and we're going to have that fast move, just like gold had a fast move out. Silver could be touching that 31, and maybe in 2 years close above 31, 38, 40, I don't know where. But this is one of the scenarios I'm imagining that maybe everybody, we miss this, and all we see this week right here is noise, and we're actually, silver is actually really sniffing out some upwards move, guys. All right, guys, last chart. Zoom in on the daily. Where's my energy going to come from? The GSR, we know that it's like the DXY or the VIX. When there's markets are going down, that skyrockets up, and if the liquidity event, everything starts to get sold off. Even gold, we've seen it here in March. Here was the gold-silver ratio, the lowest we went before all that markets starting to smell. Something's maybe going to go wrong. Maybe there's going to be issues coming up. That's the lowest the gold-silver ratio was ready to go, 79. Here was the price action. So silver was at 1945, gold at 1560. Time moves on. Oh, problem, issues, goes up. Starting to unwind the GSR. So now the GSR is at 99. We know that when the GSR unwinds, most of the time, when the silver is already starting to do an uptrend, this has a higher correlation with silver than gold. So if the GSR goes down, silver usually, that means silver is going up. Gold might be going sideways or up a little bit, but not as much as silver. Silver, most of the time, when GSR goes down, silver, it means it's going up. Silver's only 9% from those highs. So even if the gold-silver ratio is 25% higher, silver is still managing to hang around here, just 9% below that line. And gold, actually, because of that, all these financial worries, monetary imbalances, actually, no liquidity. It's sell-off in gold. Actually, even after that dip, it's actually 12.5% higher. So the gold-silver ratio went up. Gold, as it went down, gold enjoyed that going down. Silver also. But I believe that for the rest of this fuel right here that can consume down, when we get back to that 7-9 ratio, gold, yes, I believe is going to go up out of this nice consolidation or flag that we've been having for a little while. But silver is really going to enjoy, since we know gold-silver ratio is related to silver prices going up. Silver should use that fuel all the way down. So to overcome that 9%, add a whole bunch of, I don't know how much, 10, 15, 20% extra to go test those 20, 21 levels. And gold going to be moving along, but not as, probably as fast paced as silver. So there you got it. Monthly charts, guys, all in line. Silver, gold, yearly chart. Possibly silver's already broken out on the yearly chart. And gold-silver ratio, we still have fuel. Just like I'm looking at when the gold-silver ratio starts bottoming down or hitting some resistance, we could expect some issues in the silver prices. But as long as, even here, we had that pullback, which slowed down the silver price, but not that much. It didn't really go back down. And right now, as soon as that starts rolling over and we get consumed that fuel, I believe that the next leg up for silver should be very impressive, and gold should get some of that move also, guys. All right. Thanks for watching, and don't forget to subscribe. Ciao, guys.